Hey everyone, I wanted to provide a breakdown of Alibaba's various business segments and their performance because there's a lot of difference between those segments and their performance, with some demonstrating phenomenal growth and others being relatively flat. So I wanted to dig deeper and understand those segments and where Alibaba is experiencing growth from and what it's doing to reaccelerate growth in those segments that are not performing up to par. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one of its more important segments is the Taobao and Tmall group. And under this segment, they have increased strategic investment in areas such as price, competitive products, and customer service. They're also improving the membership program benefits and technology, aiming to enhance the user experience, which resulted in improved consumer retention and higher purchase frequency in the quarter. So they're focusing on several areas here in this important segment, and what they noticed is the initial results are that it's working. That's always good to hear. This could go the other direction. Sometimes managements make decisions to invest in certain customer experiences and they don't go well. And then management has to come back and report to investors and say, it didn't go as we thought. And then they start to make all these excuses on why it didn't work. And they start to blame maybe the macroeconomic environment or interest rates or something or another. But the end result is that it didn't work. But sometimes it does work. And this is one of those cases where Alibaba's investments worked. And they said that it achieved double-digit online GMV, gross merchandise value, and order growth year over year, driven by strong increase in the number of purchasers and purchase frequency. Excellent, right? Double-digit growth driven by both sides of the equation, both getting new customers and getting existing customers to spend more frequently or purchase more frequently. Excellent. That's what I like to see when I'm looking at a company to potentially invest in. Now, I don't own Alibaba stock, but I have rated Alibaba stock as a top 25 stock to buy in 2024. And I last updated that recommendation on May 14th. So I have been recommending Alibaba stock as a buy. So I'm happy to see the company making progress in this regard. The next segment I wanted to delve deeply into is its cloud intelligence group. Now this group, which includes its core public cloud offerings, and that includes products such as elastic compute, database, AI products, recorded double-digit year-over-year growth in revenue. Excellent, right? This is the segment. Of course, AI has been increasing exponentially in demand, especially here in the US, and it's now starting worldwide as well. And you'd like to see Alibaba benefiting from this trend, and as you noticed in the latest quarter, double-digit growth in revenue. Now, that double-digit growth was not as impressive because of this next part I'm going to discuss. So the management team saying that their cost benefits from infrastructure scale and advanced technologies enabled them to reduce prices across more than 100 public cloud products in the quarter. Their goal is to enhance cost efficiency for their customers and boost public cloud adoption in China. So in April of 2024, they extended these price reductions to their overseas public cloud offerings, further improving their competitiveness in global markets. In other words, they cut prices. So when you cut prices and your revenue grows, it's less impressive to me than when you keep prices stable or when you increase prices and revenue still grows. That demonstrates strong core demand for your product, organic demand for your product. When you're cutting prices, sometimes people are buying because of the promotion, because of the incentive. Now, longer term, this might be good news because it makes it more affordable, which makes it reach a broader customer base. And Alibaba's profitability overall is solid, an operating profit margin that's approaching 10%. So they can afford to lower prices to gain market share and then attract more customers, which will then lead to more profitability down the line. That could be true. That remains to be seen. But it's still less impressive than if they had grown revenue at double digits while keeping prices the same or even increasing prices. So moving on to the thing everyone wants to hear about, and that's artificial intelligence. So during the quarter, AI-related revenue for Alibaba experienced accelerated growth and continued to record triple-digit growth year over year. That's more than 100% growth year over year. Phenomenal growth rates from this segment from Alibaba, to be sure. AI-related revenue was generated from various sectors, including foundational model companies, internet companies, as well as customers from industries such as financial services and automotive. So it's good to hear Alibaba's not getting left behind this artificial intelligence investing frenzy. It is participating and it is benefiting from this trend, increasing revenue by triple digits year over year. All right, the next segment I want to talk about is Alibaba's International Digital Commerce Group, which saw revenue grow 45% year over year. That was driven by the cross-border business, in particular, growth contributed by the choice business on AliExpress. The price competitiveness and timely delivery is leading to increased customer adoption, and so they increased investments in their cross-border initiatives in this quarter. Alibaba, as AliExpress, is gaining traction. It offers reasonably low prices and reasonably decent shipping times. Not everybody wants the next day or 2-day delivery that Amazon offers. Some places prefer the 5 and 10-day delivery. If you're going to offer the products at lower prices, some things I don't mind waiting 5 or 10 days for if you're going to offer it to me at a lower price, especially things that I don't need in a hurry or things that I can plan ahead for. I'd rather have the lower price than the 2-day delivery. And I've looked at AliExpress and the prices are relatively cheaper than Amazon on a broad variety of products. So it's not surprising that they're gaining traction around the world. And then finally, the last segment from Alibaba I'll delve into is the Cathiewood Smart Logistics Network. And revenue from this segment grew 30% year over year. And that was driven by revenue from cross-border fulfillment services that support AliExpress. Interestingly, they tried to spin off this business and have an initial public offering on the Hong Kong Stock Exchange, but they paused it. They've been having difficulty spinning off these business segments and trying to separate them and create separate businesses. They've had difficulty in doing that over these last couple of years, and they paused this in March as well. But they're saying that this will enable Cathiewood to work more closely with AliExpress, and during the quarter, it extended its premium delivery, the 5 to 10-day delivery, to 4 additional countries, bringing that total coverage to 14 countries. So that's going to make it more attractive. 5 to 10-day delivery. It's still not a very long time to wait. And by framing it that way, customers know, okay, at the very latest, I'll get my things in 10 days, maybe as soon as 5 days, but I'm getting it at much lower prices than if I was to buy from many other providers, including Amazon. AliExpress has better prices than Amazon, like I mentioned. And so, yeah, I'll wait a couple extra days for lower prices. That's not too big of a deal for most buyers around the world, for most products, I should say. So that was an interesting look. I know I learned a lot from the various business segments, how they're performing, what's driving the performance overall for Alibaba, and why the company's revenue is growing by just 7%. Various business segments are doing extremely well, like its artificial intelligence growing triple digits, and others not so well. So interesting analysis, to be sure. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.